Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla and let's go over the market. If you enjoy the video, don't forget to hit that like button. It does help a lot. This is not financial advice. I'm not a financial advisor. And of course, my membership section on YouTube is live. The link is below $3 a month. I share my intraday thoughts on Tesla as it's moving, giving you updates and sometimes on other things like Netflix as well. So if you're interested, the link is below. $3 a month. We're over 200 members now, which is great, but let's just jump right into it. Let's not waste any time. The market's closing in literally just a minute and looking like Tesla will be closing at pretty much $263 on the dot, which is going to be, unfortunately, a slightly red day, down about 0.2%, but pretty neutral. Definitely a slight underperformance compared to the market, with QQ up actually a respectable 0.72%, potentially setting up a little bit of a bull flag over here. So keep that in mind. Definitely want to watch out for this right here. This is pretty spicy, which of course can be good for Tesla, but looking at Tesla specifically. So there's a few important things to talk about here, right? Like 3 or 4 very, very important things to talk about. First and foremost, let's start off with the most obvious, right? Let's go to the 65-minute chart very quickly. So you can see, right? And I said this to my members yesterday. Hopefully I said this in my video yesterday as well, but I said how I want to see a daily candle retest of that 260 to about 263 area on the chart. And that's exactly what we got today, right? We came exactly down on the daily candle today, right? It's a fresh day, to retest that area. And we essentially turned all the resistance into new support. It was kind of close. This candle was definitely a little bit spooky. I'm not going to lie. I was cutting it close, but nonetheless, we did get a beautiful bounce so far and looking pretty good so far. The bulls seem to still kind of hold control, which is great to see. So that's number one. We broke above a resistance. We came back down. We retested it so far successfully, and so far not too bad, right? The bulls are looking still pretty decent. Now, that's number one. Number two is going to be this little situation we find ourselves in. Let me go ahead and reduce this a bit so it doesn't look kind of awkward, right? But we kind of find ourselves in a situation of something like this, give or take, right? Where, ever since earnings, we had that massive fall. So we've essentially been in this little kind of medium term downtrend since earnings, right? We fell, of course, came back up, got rejected here, fell again, and now we're coming back up, and we're now getting rejected again by that same line over and over and over, as you can see, roughly, give or take, right, around this general 270-ish level, let's just say, something along the lines of that, right? So, we're getting rejected by that. So that's number one. And we want to break above that as a bull. But as a bear, you want to make sure that's defended. And so far, it has been defended. On the flip side, we also have this little medium-term uptrend line right here. You can make an argument for, right? Maybe you can make an argument for maybe this kind of situation here, but it's a little bit awkward. In all honesty, this is more specific to the overall channel, which we'll talk about as well. But, we're in this kind of little short to medium-term uptrend right over here. Actually, I would argue this is a short-term uptrend, which is this line right here, essentially on the 65-minute chart. The bulls want to defend this, and the bears want to break this. So that's kind of the battle right now, right? Which one cracks first, right? This is the next major step, right? Obviously, if the bulls win, naturally, we break above and we come up to the major retest, which is going to be not too far above, again, close to 280, which is going to be this red line right over here, which is the overall downtrend since since all-time highs, all the way back here. This is like the daddy of all downtrend lines for Tesla. This is like the final boss. Like, this is what you really as a bull want to break above and really kind of start truly shifting that momentum into the bullish side, which is going to be phenomenal to see. So those are the main things I'll be personally eyeballing right now. And that's kind of what I am personally paying attention to right now. Very, very important. So again, you want to break above. For bulls, break above this line over here, which at the moment is, again, around 270, and while defending about, low 260, very low 260s to high 250s. As a bull, as a bear, the flip. You want to defend 270 and break below, again, very low 260s to very high 250s, right? That's the kind of battle we see right now. Whichever way this is going to play out, obviously, if it comes to the downside, we'll talk about that next. I think that if we break to the downside, and let's say we lose that 260, 259, just that general level, we lose that, we break below this line, we'll come back down most likely to somewhere around the bottom of this overall massive channel that we are in, right? Which of course is going to be an important retest once again, right? This is the most important channel that the bulls don't want to lose and the bears want to break down below. Very, very important. If we do come down and if we do break down below, that'll be somewhere around 240. For now, at least. Right now, I see it somewhere around 240, give or take. Obviously, it depends on when. But that's going to be important to not only defend, but to, of course, for the bulls, also get a beautiful bounce. And that could be, if we bounce from there, the last chance you'll get to buy the quote-unquote dip this low on Tesla in a while, in my opinion. Of course, that's just what I'm thinking, right? Or what I'm seeing. That's assuming we defend it. But if we lose it, then that's going to get really, really bad, really bearish, or really fast. And we'll talk about that, of course, if it starts happening. But for now, we'll leave it at that. Again, on the flip side, if we break above, we test this overall red trend line around close to high 270s, almost 280. And that's going to be something we'll talk about as well if we break above. But that'll be very bullish if we break above the red line, and very bearish if we break up below this red line on the channel over here. So those are the main things to pay attention to, somewhat medium term-ish from now. The final thing I want to really the final thing I want to talk about is going to be this. So we have the squeeze meter. Every now and then I like to bring this up because this essentially tells you that a potential big move is on its way, like a squeeze, like, you know, like the momentum, the pot is closed, the air pressure is building, and eventually it'll let loose. And when it does, it's going to be pretty darn aggressive, right? That's kind of what this squeeze meter tells me. This could be a false alarm. You saw we had one over here, right? This little one red circle. But usually what it says is when there's a red circle like this, and especially when there's several in a row, and the more there are in a row, the bigger the squeeze is and the larger the move will be once it finally picks a direction. But we have a single red circle. Let's see if we get one tomorrow as well. Tomorrow is CPI. If we get one tomorrow, that could be important. And that could mean that a large move is building up, which will be pretty poetic considering earnings is literally next week. So we'll see how this develops. We'll continue watching it. We'll see if it continues developing red circles, and if this squeeze meter is going to continue telling us that there is a squeeze building up and a lot of momentum is building up to unleash probably post earnings. But we'll keep an eye on it as, of course, time goes on. But those are, in my opinion, the most important things to pay attention to, right? Now, another thing to remember is the fact that, you know, we had that head and shoulders pattern, which I know it's over here, right? I did remove it, but we had the left shoulder here, the head here, and we had the right shoulder here. I personally don't really view this as being a valid head and shoulders pattern anymore because we broke into the territory of the head. So personally, to me, it's looking kind of so-so. You know, I don't put too much more weight into that overall, right? So thought I'd mention that one more time if you missed it the other day. On the flip side, also we have the daily, the MACD looking pretty okay, right? It's slowing down. It's not going too crazy on the bullish side, but it's still technically bullish. RSI is looking very neutral. Nothing really too obvious there, in my opinion. The weekly chart you can see over here still going sideways. Like the MACD is kind of interesting here because it's just not really truly showing any signs of any direction for several weeks now. We've been talking about this before, but it's still doing it, right? It's still not really picking a direction, which is super duper interesting to see, in my opinion. We also have two red circles now on the weekly chart. Last week and now this week is both indicating a red circle. So the weekly chart is already showing us that a squeeze is here, or at least it's building, and it's going to be unleashing relatively soon. And I think it's true. I really do believe this is going to be accurate because if we break above, because we're getting close to a deciding factor. Again, if we break above the red line, huge momentum to the upside. If we break below this red line on the channel, huge momentum to the downside. And I think that's what's going to play out this overall squeeze right here. So this is going to be important. I think this month, maybe early November, is going to be crucial, very important to truly determine where the next move and the trajectory overall of Tesla is going to be. So take that for what it's worth. And the final thing we'll look at very quickly before we end off this video is options. See what options is saying over here, right? Overall, pretty neutral. Honestly, more bullish than bearish for sure, but nothing too completely one-sided, nothing too obvious. With CPI tomorrow, right, there's a little bit of hesitancy, I'm sure. So thought I'd mention it regardless, but again, nothing super obvious in one specific direction. There's a 1.3 million premium in calls here, 230 calls expiring this Friday. So a little bit of a short-term gamble over there, but nothing too obvious, honestly. But all in all, that's kind of what I am seeing right now. So let me know what you think down below. Ladies and gentlemen, if you enjoyed the video, don't forget to hit that like button. And as usual, I, of course, will see you tomorrow. So until then, thank you for watching. Peace.